Hey, what's up, traders? What I'd like to go over on this quick lesson is failed patterns. And the reason why I want to kind of go through this, because I know last week was some choppy trading, and failed patterns was, we had a lot of patterns that were failing. And so I want to really focus on one example of failed patterns, but patterns can fail: one, not in alignment with market internals; two, fading the trend; or three, just time frames, conflicting signals in different time frames. And so that's what I'm going to go over. This example is basically time frames that have conflicting signals. So here basically I have this is a 10-minute and this is a 30-minute chart. And so basically, as you can see, both of these are in the downtrend. I have a 20 MA on here, and the reason I put this 20 MA because I know some traders use the MAs as guides. Now I'm not sure which MA. Some could use 25, 13, 8, or 20, but this, I just so happen to put the 20 MA. This is kind of common for day trading, is to plot a 20 MA. So the philosophy with using the 20 MA is trade in the direction of the 20 MA. So that's the guide that's normally taught with it, not to pick entries or anything like that, but just to help keep an eye focused on which direction that you should be trading in. And so right here we were in a downtrend. We came down here, prices made this low. Now at this low right here, as prices made this low, well, we're gonna call this a low right now, a lower low. But to the trader who can interpret and as reading price and know the logic and the meaning behind reading price, you can see that prices came down. This bar closed below the low, but when it closed, this candle penetrated almost all the way up into this prior candle on increasing volume. Now, just so you would note that we know it's not professionals are not shorting down here. Professionals are buying down here. So we know that this is pro volume right here. This is not novice volume. This is pro volume. And the level of penetration, it kind of negated this bar. So we'll still let this sit as a lower low if you want to, but to the eye, this is not a lower low because of the meaning behind it. Lower low meant that more money was able to push prices lower. But by this close being lower and then being quickly negated, that take away the meaning of a lower low. So by reading price in accordance with volume, that will let you know that. But so we're going up and it's buying up into here, and as we get into here up around the area, with some traders like to use the 20 MA, but there's no support here. So I'm sorry, resistance. But at this point, selling pressure steps up. We see increasing volume right here, and selling steps up with this big bar, and then prices try to rally back up again, and we form this M top type. Now this is forming support. Where there is an area where there's no support, this M top has just formed support. So now this will give the signal for shorters to go ahead and start shorting. So this is a good a shorting opportunity. You have your 20 MA declining, so you're trading in the direction of 20 MA. You're at support. You're at resistance. Resistance was formed here. So prices formed resistance. So a trade below this would be a shorting opportunity. Or if you're in a smaller time frame, this could have set up for a shorting opportunity. So as we go here and we see this did set up, so it triggered. The short did trigger here to go shorter. So confirmation was waited and it triggered. So as we go on throughout the day, we see it goes and prices come here and bounce back up. So we starting to see prices bounce back up. Now we take note of this. Once prices did this, every trader that's short here, when prices start to go here, you got some people starting to cover their shorts. They're starting to panic. And once it hit here, everybody's covering their short position pretty much to win short here. And that's why this now, along with the new buyers, is buying the new high above here. But these short traders are covering their positions. So they're buying, and that's propelling these prices up. Now this was an M top. This was based on a lot of guidelines, a perfectly good shortable play. Why did this fail? So the key behind, let's see, why did this fail? We were at support, declining 20 MA. You know, at least a lot of traders were expecting to at least come here. You know, so that would have been the goal. But at this point, I can reveal, you know, this area right here, and we see the prices went up and just went, you know, straight up. So what happened that made this top M top fail? Well, we look right here to note that we came down here. This is already in a downtrend. As we got this bar, then this bar was completely negated by this big bar of selling. This big bar of selling right here on this increasing volume, what does this tell you? This is not professional shorting selling down here. I mean, we take note that this is, after a while, people couldn't bear the pain anymore of prices falling, so they just dumped off their last bit of shares. So whatever sellers were left, they pretty much just said, forget it, I'm finished, and they jumped out of it. Remember, at the end of a move, this is not professionals selling this move. Now here we get this top and tail reversal bar. This bottom and tail, and this is right after a big bar like this. And to note, on the 60 min, this is in an area of prior support, but just by this bar right here, this big bar and this big bar, the combination of these two bars, just by reading price, tells me this says that sellers just dumped off the last bit, and this was novice volume right here. Novice volume is at the end. Then this bottom and tail told me professional stepped up. And then right here, when you see this still increased volume with this top and tail bar. That means some sellers tried to bring it down, but these professionals were stepping up. They're not letting it go down. This bars is all the way up to this time frame right here. That's to the same time frame. So this is how it looked here, and this is how it looked here. And so what happened, this time frame is in conflict. This time frame just formed what I call an MRB, a major reversal bar, or a major reversal pattern. So this pattern dictates a reversal. And so by the higher time frame dictating reversal, even though this is down, these are in conflict. This is stating selling, that selling has pretty much exhausted itself. And so right here, buyers are starting to step up, but here you get a bearish pattern. And this is what happens. You come here, you get that little shakeout that came down. This shakeout, this tail right here, this reduced demand. This reduced supply. So this tail, what this tail just did, reduced supply. So now it's less sellers up here. So at this point, it gave enough momentum for prices to propel up. And this is why a lot of patterns fail, is when time frames is in transitional stages, or they have a conflict in stages. One is dictating a bullish pattern and one is dictating a bearish pattern, whether it's through trend or price patterns. So this is I just wanted to give an example on this to show you, even though this MA is moving down, which is pretty much, that's why you only use MAs as guides, because just because it's trending down doesn't mean that that's what it is. So it's a guide only. But at this point, you need to be able to read price. But this right here lesson is what I call failed patterns. So this was just based on the scenario of time frames in conflict. So that concludes this lesson, and so next week probably do another lesson. Talk to you then. Later, traders.